Okay guys, 27th of January, so we're coming up to the end of the month already. So let's have a look at both of the US indexes from last week, and then we'll have a look at the markets going into the trading week ahead. So we're starting on the S&P 500. Now really the only thing that was really tested last week in relation to our analysis was the sloping support line. You can see this market is continuing to hold at sloping support. Last week, sort of Wednesday and Thursday, we just pressed sideways. We then tested against the level, and we've seen another very strong bullish move up. Now, the only thing that I added last week with subscribers was after these two candles right here. So on Wednesday, we had a doji candle. On Thursday, we had another little bit of a doji candle, which traded within the price extremes from the previous day. So what we're looking at is actually a little bit easier to see on the 5-minute time frame. What you can see is the market testing at resistance, and it's continuing, let me just get rid of this one, to crawl up sloping support. So what we were looking at was how the market was potentially creating an ascending triangle. So we continue to look up here for resistance, down here for support, and then we were basically looking for some sort of a break. If we've seen the break to the upside, we could then look for bullish continuation. If we've seen the break to the downside, we could then look for bearish continuation. What you can see is coming into Friday, the market has popped up above these levels, tested at the support area, and then it has pressed off in a very strong move up. So coming into next week now, what are we looking at on the S&P? So once again, we're just looking toward our key levels of structure that the market has been leaving behind. Now for me, the very strong levels, or the stronger levels I should say, the really strong levels don't start to come back into really 2,700 and lower, which is a very, very long way off. As I've mentioned, if we do start to see some sort of correction coming into this market, it could be quite a violent correction. Just because we've made such a strong bullish movement with very, very little pullback. So really, this level right here remains strong level of potential support. Basically using where the market paused back in mid-January as our evidence. Now, as we start to come up, we also have taking our evidence off of last week's price action. We have another little level of support here. And then we're coming up toward these highs. Now with these highs, especially because we have just broken out of a relatively small, but still an ascending triangle, this area also remains important. So next week, first of all, if we see the market pulling back toward this level, it's a good area to look for bullish continuation once again. Now up above, really, we're starting to get toward the round number, which is where I would be setting the next key level of resistance up toward 2,900. We don't have a lot of evidence yet on this market up above because we're at all-time highs. But up toward 2,900, it's the key round number. I'd be happy to start looking for at least profit taking, potentially the sellers stepping in once again up at these levels. But at present, we are still very bullish. So pullbacks into this really 855 down toward 850 level. Good support. What I'm going to do is go onto the 4-hour time frame and just have a little look at that level. So what we can see is we've taken into account the spike up here and the spike up there. But really, this level comes all the way down to 2,841. You can see the market coming up, testing, pressing up, coming back down again, testing at the level, pressing up, and then we get the breakthrough. So really we want to make this a little bit bigger, really down toward potentially the 40 level. So we'll go back onto the daily time frame if we can, not that one. We'll then zoom in. And we'll move this down toward the 40 level. So I'm just going to put it up a little bit up towards sort of 42. Right here. Down below there we have 2830 to 2820, or about 23, and then we have 2812 toward 2795. So really this is the strong level of support. Now what we're also looking at is this sloping support line. It has been holding for quite some time since the end of December, so basically the entire month of January. And what we're looking for is a potential break of this level. So coming into next week, certainly if it's on Monday or even Tuesday, if we start to break down below this level, what we'd potentially be seeing is the break and acceptance below this sloping trend line. We could then look for resistance from this level and the moves down. Now we have that support at 2830 to 2823, but in all honesty, if we're starting to break down below this trend line, I'd expect a stronger correction, at least down to 2812 to 2795. So I'll be looking for if we start to see failures of this trend line, certainly if it's at this level right here. But at present, as I've gone over in the last few videos, the market is still in a very, very strong uptrend. You don't want to try and step in front of a trend. You just get run over. Whilst above the trend line, more than happy to look for buys on pullbacks. Really, this is the key level at present. Up above, we need a little bit more evidence, but up toward 2900 is where I would start to once again look for potential weakness, unless we get evidence next week like we had on Wednesday and Thursday of last week. But those are the main things for the S&P for this week. Okay, let's move on to the NASDAQ. Okay, let's do the exact same thing for the NASDAQ. So this market, last week, we had a very strong move up on the Monday. We then had a few pausing candles, really doji candles. And then on Friday, once again, another explosive move up on this market. So last week, we had all-time highs once again. And we seem to be doing this pretty much on a weekly basis with the US indexes at present. So we had a level sitting right at this area, around about 2845 to 2820. We also had a level down below right here, which didn't actually get tested. Right here. And then up above, we had that 7,000 level. And what we went over was how the 7,000 level isn't an exact level. We wanted to make it into a zone like this. Basically like a bit of a cushion. The market presses up, it's very unlikely it's going to react exactly at the 7,000 level. It's going to happen a little bit before or a little bit after. So what we can see is on the Monday, basically tested, you can see a tiny little tail tested at this level. We then had the very, very strong move up. On the Wednesday, we pressed up and tested at the 7,000 level, where we've seen the sellers coming back in once again. Then on the Thursday, we had a doji candle. This is actually an inside day, so trading within the extremes of this candle and also the body, open and close within the body of the previous candle. Only thing I went over with subscribers was we could look up toward the extremes of this candle for potential breakouts, and then confirmation at the breakouts of this candle right here. The only thing I went over also is if we broke up, breaking up above the zone for buys, but breaking up above this one, I really wanted to see a stronger move up above the 7,000 tag. Because this is a zone, there was the potential there we would see a false breakup and then the market crashing back down once again. Then we got up to around about 7,030. So coming into next week, what are we looking at? Let's get rid of these segments. Let's get rid of this one at present. Okay, so the market has given us a little bit of a clue. So for me, I only really want to include this one in the 7,000 level. So that is sitting at around about 6,990 up to around about 7,010 at present, until we get a little bit more evidence. This upper band may change depending on the price action that we start to see, but at present, for me, that is the area at 7,000. We then have down below around about 6,980 down toward 6,970. Again, another little level of potential support and resistance. And then down below there, it's really this whole area at 6,910 down toward 6,875. So this whole section right here is potential support. Now, similar to the S&P 500, we're again having the trend line on our charts. If we start to fail at this level, then it starts to give us a suggestion that potentially we are going to see a stronger correction coming into the market. But at present, this market also remains very, very bullish. What I'm going to do is just drop onto the 4-hour time frame quickly. Just have a look at these 3 candles and the structure that they left behind. Okay, so what I would say is this zone down here, we could actually move up ever so slightly toward around about 6,920. We could actually move this up also toward 6,890. Up above, we could potentially bring this one down just a little bit toward 6,953. The reason we're doing that is because we can see, if we're looking at it on the 4-hour time frame, where the main structure is. So if you don't have a lot of evidence on the daily time frame, if you drop down onto the 4-hour, you tend to get a better view of what the market has been doing. So really, we'd want to move this up to 6,920. We'd want to get rid of this one, get rid of this one. Set the band at around about 6,890 right here. If we can mark it in, get rid of this one. We'll have the level sitting around about 6,960. I'm still happy with the upper band at around about 6,980. We can just mark that one in right here. And then we have up toward that 7,000 tag, which is sitting just up above. Okay, so for this structure, what are we looking at for next week? Well, as I've mentioned, we are still in an uptrend. We are potentially seeing the break up on this market. So pullbacks into this level of structure for bullish continuation makes sense. I'm a little bit less keen to buy at the 7,000 level until we start to see a little bit more evidence that we have actually broken up above that key round number. Now, if we start to fail at this level, next key level of support is down towards 6,920 to 6,890. Again, especially if this is lining up with that sloping support level. So really, if we're starting to see it from Tuesday toward the end of the week, this is a very good level of potential support. Now, also with these levels, if we're failing at this area, it becomes worthwhile looking for potential resistance and the move down to the zone below. If we start failing at this one, definitely worthwhile looking for those stronger moves down, because we're also potentially breaking back through the sloping trend line. I'd then be happy to start looking for moves down toward really 6,845, just being a little bit careful of this spike down right here as a potential area of support. If we start to get back down to those levels, again, good levels of potential support. However, if we look on the daily time frame, what we can see is if we are starting to fail below this level, we do have a level of support here that we have marked in. We do have one here. For me, this is the stronger one, 6,790. And then if we start failing at this level, I'd really expect a stronger correction down toward the round number 6,700. Okay, so that's pretty much everything for the NASDAQ of this week. As I've mentioned, we're up at the 7,000 level. For me, I'd like to see a little bit more evidence that we are breaking through here before I look for buys. However, pullbacks to our zone down below, good for bullish continuation, as is the zone down below there, taking into account these previous lows, which we can see a little bit easier on the 4-hour time frame right here. For bullish continuation, if we're starting to break this level, I'd then start to look for slightly stronger correction, certainly down towards 6,845, potentially all the way down to 60, really the 6,800 levels. Okay guys, so that is everything for this week. As always, I hope that was helpful, and I hope you all have a great trading week next week. I'm James Orr, and thank you.